Palantir just shocked investors. The company posted one of its strongest quarters ever. Revenue surged, guidance crushed expectations, and yet the stock is collapsing. Palantir shares are down more than 18% this week, over 20% for the year, and nearly 40% below the recent high. So, what went wrong? Did Wall Street lose faith in Palantir? Or is something much bigger happening? Let's break it down. Here's the confusing part. This sell-off did not come after bad earnings. It came after great earnings. Now pay attention to this. Palantir reported revenue of $141 billion. That's up 70% year over year. It beat Wall Street estimates easily. US commercial revenue exploded, up 137% in 1 year. Then management dropped a bombshell. 2026 revenue guidance above $7.1 billion, far higher than analysts expected. On paper, this was a perfect quarter. So why did investors hit the sell button? The answer is not Palantir. The answer is AI fear. Over the last few days, everything changed. OpenAI launched its new frontier agent platform. Anthropic released Claude Opus 4.6. And Wall Street panicked, because these AI systems are no longer just tools. They are starting to behave like operating systems. AI that can build software. AI that can replace workflows. AI that can do enterprise work directly. This surprised Wall Street. Investors suddenly asked a scary question. What if traditional software companies become unnecessary? That fear triggered a massive sell-off. Nearly $1 trillion was wiped out from software stocks. High multiple tech names were crushed. Palantir got caught in that wave, even though it is an AI leader. Then came the valuation problem. At its peak, Palantir was trading at over 300 times earnings. That leaves zero room for error. So investors who were sitting on huge gains did one thing: took profits. Remember this. Palantir stock was up 138% in 2025 alone. Add fear to profit taking, and the selling accelerates. Insider selling made it worse. Nothing extreme, nothing unusual. But in a nervous market, even small insider sales scare retail investors. Stops get hit, momentum flips, and the stock slides fast. But here's what most people miss. Palantir is still one of the best performing stocks of the last 5 years. A $1,000 investment turned into nearly $4,000. The business is still growing fast. US commercial demand is accelerating. Government contracts remain sticky. This was not a business collapse. This was a sentiment reset. Palantir is also a volatile stock. It had over 40 moves greater than 5% in 1 year. So while this drop feels dramatic, the market does not see it as fatal. Just weeks ago, Palantir announced major deals, expansion across Europe and the Middle East, and even analyst upgrades. The long-term story did not disappear. Here's what could happen next. Scenario 1. Tech multiples compress further. The stock moves sideways or dips more. Scenario 2. Earnings growth proves the fear is overblown. Buyers step back in at lower prices. Scenario 3. Palantir fully embraces AI agents and becomes a platform winner, not a victim. That is the real debate. So here's the bottom line. Palantir did not fall because of weak earnings. It fell because of valuation, profit-taking, and AI fear. Whether this drop is a buying opportunity or a warning sign depends on how Palantir adapts to the next wave of AI. Now I want to hear from you. Is this Palantir sell-off an overreaction? Or is AI about to destroy traditional software companies? Drop your answer in the comments.